Morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, May 14th. A quiet mixed trade overnight. However, as we get closer to the morning pause, prices are starting to tilt a little bit to the downside. Corn right now is 2 to 3 lower. Wheat prices down about 7 to 8 cents in Minneapolis, 4 to 5 lower in Chicago and Kansas City. Bean complex is mixed, still a penny better in old crop beans, down 2 to 3 on the new crop. Slightly higher trade in the meal, slightly lower trade here in the bean oil. Yesterday, the spot board crush margins did rebound about 5.5 cents to $1.39 a bushel, with bean oil product value closing at 46.7%. That's a 2.5-year high. The funds yesterday, there were sellers of nearly 12,000 contracts of corn, 4,000 beans, 4,000 meal, buyers of about 8,000 bean oil, and a couple thousand in the wheat. Thought yesterday's wheat trade was reflective of a little bit of a short covering bounce. However, that wasn't the case as open interest increased. 7,000 contracts for both Chicago and Kansas City futures. I'd expect Friday's CFTC report will show that money managers have now flipped and are net short corn for the first time in 7 months. We've got them short almost 20,000 contracts. Still heavily short in the wheat, and still likely record short here in soybean meal. While weekend trade talks with China were constructive and the lowering of the tariffs were certainly welcome news to the marketplace, the clock is ticking on the Trump administration to get a trade deal done by early August. The USDA new crop soybean export forecast at 1.815 billion bushels is already the lowest in the decade to start off with here in May, and it's going to be difficult to achieve even with the trade tariffs of China at 10%. Combined production from South America was actually cut 500,000 tons on Monday by the USDA, with lower production in Paraguay, but at 228 million metric tons, it's still a record large crop, up nearly 15 million metric tons from the previous record crop. So plenty of competition here in the global marketplace from South America. Weekly ethanol production later today expected to come in about 303 million gallons, up from 300 million the previous week. However, at that level, it'd still be just below the pace needed to hit the USDA forecast at 5.5 billion bushels. Export sales tomorrow, and NOPA crush also out tomorrow. Weather-wise, good rains will be starting to fill in here across the northern plains today, bringing relief from recent record high temperatures. Through early next week, rains are expected to favor the northern plains and the southeast Midwest. By the middle of next week, widespread rains and cooler temperatures are forecast for a vast majority of the nation's midsection, nearly ideal for early crop development. Much lighter rainfall totals in the southwest plains. July corn here did back off after reaching a little bit of a bounce here overnight. It still remains a penny or two premium over new crop December. Next support is at 427.5. Support for D's is at 435.75. July beans, they did back off after reaching a fresh 3-month high overnight. Next resistance at 11.05. Longer term support at the 100-day moving average at 1045.5. Meal stuck between 290 and 300. July bean oil also backed off after reaching a 20-month high here overnight, just shy of that 52-cent level. And wheat just continues to hover above its recent lows, unable to find a spark to ignite any sort of short covering rally. Day one of the Kansas Wheat Tour did estimate yields at 50.5 bushels per acre, above the 5-year average of 45 and slightly above last year's 49.9 bushel per acre estimate from day one. On Monday, the USDA pegged Kansas wheat yields at 50 bushels an acre, well above the 43 from a year ago, but still well below their record high of 57 back in 2016. Thank you for listening, everyone. Hope you have a great day.